According to a survey, the majority of US citizens believe that the economy is in a very bad situation. However, the exact opposite of what people believe occurs simultaneously at the stock exchange. For instance, the S&P 500 signifies 50% of the worldwide stock market volume and achieved fresh record highs last week. At the previous all-time high in November 2021, precisely 3 years ago, interest rates were at 0.25%. Today, the current percentage stands at 5.5%. The market crash, inaccurately highlighted in the title, will intensify further. In today's video, we will explore the reasons behind this and discover how we can all benefit from the situation. My name is Benjamin.
My name is Hannes, and if you think that not only money and the financial system have a serious problem, then we have brought the right thing for you. And that is a free course that teaches you the most effective way to set up your own portfolio in the best way possible. The one who shows you how the biggest seller burns the most money from people over and over again and how to prevent it all. And of course, how one can benefit from what we are currently seeing in the world. The whole thing linked below the ball for free. You can simply put yourself in the list and then you will receive the courses immediately and promptly. Benjamin, let's see what's happening in the USA. There's a lot at stake, right?
Hannes, absolutely. It's a crazy world, and people in the middle class and the socially weaker class in general are getting worse and worse every year. But simultaneously, and this is the thrilling part, a small elite is consistently growing their wealth and improving. The problem is that this effect depends on redistribution, inflation, and the expansion of money supply by central banks worldwide. Let's consider Germany as an example. Let's check the German stock market. The DAX index is at 16,700 points, Hannes. It falls short of the expected word count by 4 words. And the exciting thing is that, just like in America, the stock markets are at all-time highs. That's why the situation is precarious, as no one understands why the stock markets are at all-time highs despite the crisis. Looking at Germany, Hannes, we made a great video. Please watch it again on Tuesday. Protests surge on streets as farmers and others voice discontent. People demand change, united in frustration and fed up. And if we look at Germany, for example, in 1920 or 1921, it was damn similar in the financial market at least. Despite the post-war period, the stock market has boomed, similar to the COVID time, despite a weak economy. Now let's examine the graphic and observe the developments in the Weimar Republic. Despite the crisis, the stock market in the Weimar Republic tripled or quadrupled in just 2 years, from 1920 to 1921. During this time, stock investors have become rich, while those working in the real economy have paid the bill. Now, I'd like to read a quote. Numerous Germans were optimistic and euphoric regarding the stock market, which essentially tripled in nominal terms. Most people with wealth in bank savings accounts and government bonds, which was the majority at the time, lacked this advantage. In late 1921, the currency collapsed again. The mark, acting as a store of value, rose in nominal terms as the stock market served its purpose. The entire thing originates from a blog post by New World Economics. It's thrilling to witness, Hannes, that we are currently in the United States at the precise moment. We'll talk about that later. In fact, if we now value the whole thing in dollars, back then dollars, so the Weimar Republic, the stock market back then, if we value the whole thing in dollars, we see that the stock market has fallen by 70%. And it is also important to mention that back then, the dollar was actually convertible into gold. Not necessarily a graph where you now price the German mark in dollars back then, the stock market, but actually in gold, because back then the dollar was backed by gold from 1920. Only those with stocks, tangible assets, and gold benefited during that time. In the end, only gold owners had something to laugh about, as the stock market boom before the hyperinflation of 1923 was temporary. Those who possessed gold earned well. And Hannes, anyone who also deals with or has dealt with history knows why the German stock market was pumped up at that time. Because, as we clearly stated in our geopolitical outlook, the Weimar Republic had a lot of foreign debt at that time. That means reparation payments, back then in truth of $33 billion, which they had to pay. And they just did that by printing fresh money, printing fresh market, and then using it to pay off the debts. But now, Let's see, and now it gets exciting, let's see other countries on the same path of self-destructive implosion. Starting with Iran, let's examine its stock market. It's remarkable how poorly the Iranian economy is performing. Stock market near all-time highs. Let's continue. Venezuela, stock market near all-time highs. Stock market is booming. It nearly tripled in 2023. Let's move on to Turkey. An absolute stock market boom in Turkey. Since 2022, we have seen a quadrupling of the stock market here. Let's continue and take a look at Zimbabwe. Zimbabwe still exists, and there is also a stock index, and it has made 1700% of this top performer, 1700% in the last 12 months in the year 2023. Not over yet, keep looking. Let's see what happened in Argentina. In Argentina, stock market all-time high, you all know it. Here also a quintupling in 1 year. Let's go on. Egypt, now a big topic of course with the Israel-Mars conflict, also stock market all-time highs. Alone in 2023 until now, there has been an almost twofold increase in the span of time. Let's proceed. Lebanon, yes, we continue. Lebanon stock market also near all-time highs. Lebanese stock market has flourished. All of these 7 countries share a common characteristic with the Weimar Republic, which is the practice of printing and using money to settle their debts. In all countries, the same effect is seen, including in the USA over the past 2 years. The interest rates have exploded, and the bond market has completely collapsed. Only the people who have actually invested in tangible assets right now or who have hidden their money abroad are financially viable now. Simply incredible, isn't it? Write in the comments what you think of this trend. Have you been aware of what's happening in the world? Were you aware that the monetary system, everything we see now, is actually completely fabricated and not based on reality? Subscribe now, give it a thumbs up, and instantly share this video. Don't miss out. Now let's continue and examine the United States of America. Let's shift our focus to the USA, and now let's consider one thing, specifically the USA and its incurred debts. And here you can see all the debts that are currently available for purchase on the bond market. We are somewhere around 26 trillion US dollars. In this graphic, debts are not decreasing but increasing, especially this upward trend, which is very clear. In COVID 2020, it really started to rise exponentially. That means there are more and more debts in the world, but less and less demand for these debts. Similar to the Weimar Republic, only the wealthy benefit from the stock market and tangible assets boom, leaving others at a disadvantage. But they don't care at all what happens to these bonds, but it does matter to the people who have pensions because that's where the money is, of course. People with paper money in their accounts, afraid of investing, that's where they lose. That means anyone who holds cash or even bonds has already lost a lot of purchasing power in recent years. The USA experienced the biggest online crash since 1776 in the last 2 years, and the S&P 500, getting back to the topic, is at an all-time high measured in US dollars. If we look at the S&P 500 today in the next chart, we can see that actually the S&P 500 has lost 57% compared to gold in the comparison of 24 years ago. And if we now focus on the distribution of wealth, since we were just discussing classes with higher income, layers with less money, people benefiting, some not benefiting. Let's now see this graphic and how wealth is distributed. And of course, we see here Germany marked in red. They have a 68%, so 68% of the wealth distribution in Germany is still the middle class. 11% are poor and 20% are rich. It's no secret that the middle class is shrinking over the years, while the poor, especially the poor, are becoming increasingly impoverished. However, it is not set in stone either, which provides some motivation for us to offer you. Moving from middle class to lower class isn't inevitable. One can ascend from middle class to upper class as well. This is also possible, and there are many options. Thanks to investments, clever entrepreneurship, or education, for example, this is just meant to motivate you. The video helps you belong to the upper class and avoid sliding into poverty. Its main goal is upward mobility. And that is also going very well now in the coming years due to the large transfer of wealth currently taking place. In the last 10% of market movements, when Bitcoin corrects or gold doesn't rise, people start complaining. However, in the final 10% of major market movements, these ecstatic movements occur, creating generational wealth. You must also endure a 20 or 30% correction. In 2020, we started the poisonous path of inflation. Seen in Iran, Lebanon, Egypt, same thing happens worldwide. DAX at all-time high, despite people on streets and struggling. Exactly the same in the USA. And due to the constant expansion of debt and the non-existent demand for this debt, the central bank will soon have to reverse its course and buy unlimited government debt again, possibly in March or April 2024. That implies it necessitates an unlimited amount of money once again. We will witness an inverse crash in the stock market on the upside. We will see a stock boom in the next 2 to 3 years, unlike anything we have seen before, despite the poor economy. And this boom is not caused by a thriving economy, but by an uncontrolled expansion of the money supply that only enriches a few investors. This upper class is widening and unfortunately impoverishing the others, but if you don't want to be on this loser's side, you inevitably have to deal with investing. There's just no other way. We are the right ones for that. Hannes, you should definitely register for the new free seminar for the Portfolio Management Masterclass, as many things will be taught on how to get started easily.
Benjamin, one thing you said that is very true, and that is that most people, especially in the middle class, in the broad middle class, have their focus entirely on the poor people, on the poor class, where they don't want to belong, where they are afraid of slipping into. The focus should be on entering the mutual, going precisely where the wealthy are presently, and ultimately becoming part of that group. That's where the focus should be. You mentioned multiple paths to reach that goal, like investment or entrepreneurship. It is important for every entrepreneur to understand that no significant accomplishments have ever been achieved in the past by staying as a recipient and relying on the state for support. In this scenario, there is an absence of innovation, progress, growth, and opportunities to belong to the wealthy. However, true entrepreneurship emerges when one's own horizon reaches its limit today. And in that sense, the second path you mentioned, through the history of investing, we have seen time and time again in history, during major upheavals, it has simply been possible, in the end, to rearrange the stars through clever investing or clever entrepreneurship, and then enter an era that means a lot of prosperity and wealth. If you are interested in learning how to position yourself based on investing and derive your own steps, then, as I mentioned before, you can access the free portfolio course below. It provides comprehensive knowledge on these topics. No expenses, simply dedicate a couple of hours and then enhance your own understanding correspondingly.
I hope you enjoyed the video. Share it, give it a thumbs up, comment if you know what's happening in these countries. Stock markets can rise even in an economic crisis, so let's not forget to regulate them. This year, particularly in Iran, Venezuela, Egypt, Hannes, and we will not get any sleep.
Western Pest seizes opportunities in this epochal time in Europe.
See you tomorrow. Goodbye.